Hey guys, we're continuing our accounting lessons, and today we're going to be talking about source documents. Now, in our earlier lesson, we spoke about the books of original entry. These are the books that we would record our transaction in. But before we know exactly which book or where we're going to record a transaction, we need something that is called a source document. And so I am just going to go through quickly some of the source documents or some of the documents that you would use to record your transactions. And the first document is one that is called an invoice. And the invoice is normally very important. It is a very important document in business because on the invoice, that invoice, whenever we buy or whenever we sell something, that's invoice is what we will get. Invoice would include the buyer's name or the seller's name. It would include the amount of items that is being purchased, the cost per each item, the total cost of the items, and if there's a discount, the total discount that would be given, and then the final price that would be paid. So your invoice is absolutely important. It's also going to let us know whether this is a purchase transaction or it is a sales transaction, and hence where we are going to make the entry. The second document that you need to know about is one that is called a credit note. It's called a credit note. And the credit note is normally drawn up by the seller. Let me put this right here. It's drawn up by who? A seller. Drawn up by the seller. That's the credit note. It is drawn up by the seller when goods have been returned by the purchaser, and therefore we call this return inwards. We call this return inwards. So it is drawn up by the seller when goods have been returned to the company, return inwards. So for example, if I purchase goods from M. Morgan, if I sold goods to M. Morgan, and the goods was $500, but Morgan decided to return $20 worth of the goods to the company, I am going to have to debit my return inwards. We're going to talk about double entry later. I'd have to debit my return inwards, and of course I would have to credit Morgan with that $20, hence my credit note. So the credit note is when goods is returned to the company. The next document is called a debit note. Debit note, and the debit note is the opposite of my credit note. The debit note is drawn up by the purchaser. So this one is drawn up by the purchaser. Drawn up by the purchaser whenever goods are returned by the purchaser, and this is called return outward. So here my debit note is when I have a return outward. So goods is returned by the purchaser from the company, then we're going to end up having a document called the debit note. Goods that is returned to the company, returned inwards, we're going to credit the person with that amount of money, hence we're going to write a credit note. Next document that we are supposed to know about is one that is called a bank pay-in slip. It's Paying, pay-in slip. Whenever we are depositing money to the bank, we don't just go to the bank and say, here's some money. But we'd have to write up a bank pay-in slip. As a company, you'd have to write up the bank pay-in slip saying, I gave you $2, $1, I gave you $10, I gave you $5, it's $10, $50, it's $100, and then at the end of that we would tally to see exactly how much money it is that we're depositing in the bank. And so you do what is called a bank pay-in slip. Next document that we would find in business is called a check counterfoil. It's a check counterfoil, and for most checks you would find a check page would look something like that, And right out here you'd have all your information, the name of the person, the amount, etc., and then a signature. But right along here, this section of it is called a counterfoil, because on this section of the check you would find out, I think I need to put this a little bit clearer where you can see what I'm talking about. I'm getting it out there. So here's my check, and this part of the check would have the information, for example, the name of the person, name of the company, the amount that you're being paid. But right along here, all that information. So when you rip this piece of the check and hand it to the person who you're paying this check to, you would have in your checkbook what is called a counterfoil. Next document you need to know about, document number 6, is the receipt. RECEIPT, a receipt. Whenever we hand cash or someone hand us cash, we are supposed to receive, we are supposed to hand the person a receipt to say, yes, I have received this amount of money. So there's the receipt. Then there's also number 7, which is called a petty cash voucher. Petty cash voucher. And the petty cash voucher is used whenever we're spending money from our petty cash book. The petty cash voucher. Now that's different from the receipt that I use for my cash book. So if I'm gonna give my petty cashier, and the company will have what is called a petty cashier. If I'm gonna give my petty cashier some cash to put in the petty cash book, then I'm gonna have to write up a receipt. I'm gonna write up a receipt. But whenever the petty cashier spends money, then they're gonna have to write it up on their petty cash voucher. So they have a voucher each time you spend 10 cents or 50 cents or 5 cents. Remember, 1 cent make a big difference in business, and so I am not gonna just spend 15 cents and did not record it. But it would be unwise for me to take my petty cash, my receipt book, to write up a receipt for 15 cents when a page in that receipt book is going to cost more than 15 cents. So the petty cashier would have what is called a petty cash voucher, and this is to record these little transactions. So quickly, let's review. We have the invoice, we have the credit note, we have the debit note, we have the bank paying slip, check counterfoil, receipt, petty cash voucher, and these are documents that we will use daily in our accounting process.